Hey guys, it's Frank here from Altcoin Buzz, and today I'm going to do a price prediction for VeChain. So I thought I would start off with a bit of comedy today. I found this pretty hilarious. You have these kids here trying to figure out how Doge can reach $1. Now, unfortunately, this is not a real video. These kids were actually discussing the merits of Fortnite, but I thought it was good to bring this up to just give you some perspective about predictions in general. You know, no one knows anything for sure. The only thing you can do is make an educated guess about what's going to happen in the market. And it's very hard to predict what's going to happen sort of a long time from now. But there are a certain number of indicators which can make it more likely than not that something will happen in the short term. So before I get into the VET price prediction, make sure you checked out yesterday's video where I talked about how high Cardano will go. So I'll just play this one clip from the video. However, I would not personally be a buyer here. Firstly, because we have a resistance over here, 1, 2, 3, we have a potential resistance up here. And secondly, because I think we have a very strong chance of coming below this price at some point in the future. So as I said in the video, I thought there was a high chance that we would come below this price in the future. And although we actually made a move up to 139, we corrected a good 5% below that price. And as I said, I wouldn't be a buyer there because I thought it would come below. That has come true. Of course, we corrected exactly in the middle of this resistance zone. I predicted that we would do something like this. Now, this is not to say that we can't continue up and actually reach this previous level or even a little bit higher, but I think it's more likely than not that we will see a further retracement even from this level, and therefore I would still not be a buyer. Now, in the last video, I talked about the price going up there and coming down here. This wasn't so much a price prediction as to where it will find support as much as it was just a really good level to find support, okay? So we found multiple reasons for why this would be support. Just to clarify, it's entirely possible that we correct somewhere over here and go up. It would be really hard for me to say that unless we saw some price action approaching this level. In any case, it will be interesting to see how ADA performs later on. Then again, just in case you're wondering what kind of predictions I've made in the past, I've only made actually 2 prediction videos in the past. One was the ADA one and one was this Ethereum one. And I'll play this little clip from the Ethereum video for you. We could assume that there might be some potential resistance over here moving forward. It's more likely than not that we will see some sort of price action once we get to this point, and we may see a retracement, but the point is that it's unlikely that we cross this $250 to $260 zone in one foul swoop. So this video was from 1 whole month ago, and if we go to the charts and check out Ethereum here, you can see at the time of that video the price was $238, and what happened, we came to this zone 250. That was the beginning of the zone where I said we might find resistance, anything up to 260, and what happened, we saw a 15% correction before making another move up. Okay, so enough of me talking about how great my previous predictions have been. I know they won't all be great, they won't all be accurate, but I just thought you might find it interesting to note that my previous 2 predictions have in some way come true, especially this Ethereum one where we saw a major correction. So again, before we get to the VET analysis, I would like to go over CoinGecko and show you why I'm choosing VeChain. So VeChain has made a 100% move over the past 7 days, and it has a market cap of almost $2 billion. So similarly to the Cardano video from yesterday, I'm looking for coins which have large market caps, which have made large moves, and which may potentially be finding exhaustion at some point from the buyers. In other words, the buyers may be getting a little bit exhausted and the selling pressure may come at some point soon. I also want to bring your attention to this chart which covers the Bitcoin dominance. Now, I brought this chart up in a video about a month ago, and I talked about how we have this bearish engulfing candle over here on the weekly and this bearish engulfing candle here. Now, before I get into exactly what that means, this is a Bitcoin dominance chart. This represents how much of the whole market is represented by Bitcoin. So as you can see over here, for example, at this point, Bitcoin represented 67.5% of the whole market. And we saw one of the biggest alt seasons here when it went all the way down to 32%. So what does that mean? That means that at one point, Bitcoin represented the majority of the whole cryptocurrency market. But when it went down to here, altcoins were absolutely booming and taking over from Bitcoin. And then I alluded to the fact that we were seeing another engulfing candle over here, and that this might lead to another similar altcoin rally. Now, I can't say with high confidence that this will be another massive rally. I mean, here we saw a 41% decrease in the dominance of Bitcoin. However, we have already seen a 5.5% decrease in the dominance of Bitcoin, and therefore an increase in the altcoin market. And I just thought it worthy to show you guys how technical analysis very often can show you what is going to happen before it's going to happen. Another cool tool which I like to look at is the coin dominance, but here we're going to look at the dominance of Bitcoin. Back in September 2019, about 9 months ago, you can see Bitcoin here was at a dominance of 70.5%. And what's happened now? It's gone all the way down to 61.7%. So that's about a 13% drop in its dominance. And let's look at what's happened with the altcoins since then. So have a look at Ethereum. Ethereum here was at a dominance of 7.1%, and that's shot up to 9.8% almost. So that's a 40% increase in the dominance that Ethereum has. So in other words, Bitcoin has lost a share of its market to Ethereum. But this is even more interesting. Look at the others. Okay, so I'm coming back here again to September. Others represents, at the peak, it represented about 16.5%, okay? That means that 16.5% of the other coins in the market, that's pretty much most of the coins which are not in the top 10, kind of the small and medium cap coins. This went from 16.5%, and now look at this, 23.6%. Similarly to Ethereum, this is also a 40% move up. So what does this tell us? This tells us that people are getting really excited about cryptocurrency. Why? Because they're willing to invest and buy coins which have a much higher risk profile than Bitcoin. Bitcoin already has a pretty high risk profile for traditional investors, but if people in the cryptocurrency market are willing to buy other altcoins and Ethereum, it shows a real shift in the way that people are viewing cryptocurrency, and it may be an indication that Bitcoin is going to start an official bull market. Now, when I talk about Bitcoin starting an official bull market, what I mean is that right now we've had this powerful move up here, but we haven't had a correction and then a break of a previous resistance. In other words, we don't have a higher high and a higher low. And until we see a higher high and a higher low, we can't say that Bitcoin is in a bull market on the weekly time frame. However, as I pointed out, it's very interesting to note that these altcoins are booming so much, and this might in some ways be the catalyst for Bitcoin to break its previous highs. Nonetheless, I have to admit I'm a little bit bearish personally on Bitcoin doing that right now. I think it's somewhat more likely that we come down to 7 or 8K levels, but I would only say that's about 55% probability. I'm not saying that with a high confidence level. Okay, and one final thing that I want to show you guys before getting into the VET price prediction, because I really want you guys to learn about the market and learn about these tools as opposed to just listening to whatever I say. It's really not a good idea to just be like, oh, well, this guy on YouTube said this, so I'm going to do this. That's not how your investment decisions should go, all right? And again, please note that this is not investment advice, okay? This is not financial advice. Trading presents serious risks, and I don't want you guys to lose a lot of money just because, you're doing what I said without thinking about the repercussion. Okay, so what are potential considerations for an exit strategy? First of all, if the cryptocurrency that you hold, for example, let's say you're holding VeChain and it represented 20% of your portfolio a month ago, and now after the recent pump, it has now come to represent 50% of your cryptocurrency portfolio. Well, this might lead you to saying, okay, well, I believe in VeChain and I believe in everything they're doing. They have great fundamentals, great technicals, but I don't know if I feel comfortable having 50% of my portfolio in them. So in other words, you might think that they might have some more upside potential in the short term, but considering that you have 50% of your crypto portfolio, if VeChain drops by 50%, for example, like your crypto portfolio drops by a full 25%, and that's a big risk to take on just one cryptocurrency. So that's one consideration. Secondly is what percentage of your total net worth that becomes. So again, if let's say you have an altcoin, it represents a small percentage of your net worth, like 10%, but then it does a 10x. well then all of a sudden that altcoin represents, a huge percentage of your net worth. And you might want to consider taking some profit or maybe even substantial profit so that you're not exposed to that high level of risk. Then furthermore, there are the technical indicators suggesting exhaustion, and that's of course what we'll be looking at today. This might tell you, okay, well, I believe in the cryptocurrency, I believe in the fundamentals, they have great news, but right now I think I would like to get out of this coin because it looks like there's several technical reasons for why it might correct. And then finally, what percentage of your position are you trading versus hodling? Trading is risky and it presents a lot of uncertainties. Whereas, if you just buy a cryptocurrency that you believe in and you think it has good fundamentals, it might be an idea to actually not trade and just hold that position long term. Or alternatively, use a small percentage of that position for trading and then using technical indicators to get in and out of that trade. Okay, so with all that behind us, let's go to VeChain. So if you've watched my previous videos, you know that I like to start with a clean chart. Price action is the most important thing when you're looking at charts, and I like to keep it as simple as possible. So again, I have a bunch of indicators. I will be using some of them as we progress, but let's first of all start by just doing the real basics, which you can do yourself and which are pretty important as well, is just looking at the general outline of the market. So we have a clear resistance here in the past from which we had a massive correction. We corrected a full 95%, and so many altcoins are seeing this kind of move. And now we are seeing a breakout. So this downtrend was officially broken when we broke out of the 0.0085 level. And not only have we broken out of this downtrend, but we've broken out of it with style. Look at this volume getting really explosive, very similar to Cardano. We're seeing increasing bull volume here. So this is a strong sign that we may start a new monthly uptrend for VET, but of course that is a long way away because for a monthly uptrend, we would have to see a correction and then a break of the previous high. Okay, so now that we've got that out of the way, let's go to the 1 week chart where we can see things in a bit more detail. So here we can see another notable resistance line, which is interestingly exactly where the price is at right now. So from this level, the price reached there and then it corrected 92%. So, quite a significant level for us to reach. And what happens very often with technical analysis is that you'll have this level and there will be what's called a fake out where the price goes above it but then it comes right down below. Now it's too early to say if this is a fake out, especially on the weekly time frame as there's 3 days left for this week. But it is worthy to note that although we broke this, it does not mean that we have now broke it confidently and that we are going to continue to see new highs. So the next thing to do is to look at this powerful move up here and try to break it down. So what are we seeing here? We are seeing a move up over here and then a correction and then another move up and a consolidation and then another powerful move up. Now, why do I call this a consolidation and why do I call this a correction? I call this a correction because we have a lower low compared to the previous candle. So if I just zoom this in over here to make this clear for you guys, look at these candles. We had higher lows, higher low, higher low, higher low, and bam, lower low. So this is a clear correction. We went up and we corrected downwards. Here, I call this a consolidation because we did not see a lower low. However, we saw two inside bars and we also saw a pretty significant move down from the previous high of 28%. So again, I'm viewing this as one wave up, a correction, another wave up, a sort of correction, but really more of a consolidation, and then another move up. Okay, so now let's have a look at the RSI and the MACD. The RSI is absolutely insane. We are right now at 88.4. This is not the kind of time that you want to get into a cryptocurrency, especially not based on technical analysis, because this means that the market is exhausted. It's a good sign in terms of, we might see another massive move up, but particularly it's indicating that we are due for some sort of correction at some point soon. And in terms of the volume, again, you can see the increasing bullish volume, which is very solid. And also in terms of the moving averages here, we have the EMAs This pink one represents the 10 EMA, the orange one represents the 20, I think it's actually the 21, that's right, the 21, and the yellow one represents the 55. So the fact that the 10 is above the 21 and the 21 is above the 55 is again a sign that we are entering a new bullish market. So that's obviously great. Okay, so now let's take this down to the daily time frame. So before we go to the daily time frame, let's have a look at the nature of these waves. And to do that, we're going to use our trusted Fib extension tool. So I've explained what the Fib extension is in the previous video on Cardano. Feel free to check that out if you have no idea what's going on here. But essentially what this is telling us is that we had one move up and then we saw twice the power, twice the extent of that move up the second time. So this, in other words, reached the 2 level or the 200% of this first move. Now what's very interesting to note is that, let's just take this out, let's look at what happened on this second wave up. So we take it from the bottom here to the top of this wave, we take it to the correction. Now look at this. We went up to, again, a 200% move, and look what's happened now. We've already corrected quite considerably, about a 11% correction. So there is some indication that this is an important resistance point. Okay, so now let's take it down to the daily time frame. And again, guys, I know this is a long video explaining all the technical analysis, but if I wasn't doing this, then I would just be pulling numbers out of my ass. And I really want you guys to learn about why I'm doing these things and what it means, so that when the price reaches a certain level, you can say, oh, well, you know, Frank said that this price might resist at this level, but because the RSI is, you know, really overbought, I always get that wrong in my previous videos, because the RSI is, you know, reaching 93, maybe I shouldn't buy. The point I'm trying to make is that if I make a prediction one day, the next day that prediction may change based on how the technical indicators themselves have changed. Okay, so on the daily time frame, one thing which I noticed, now I'm not crazy about diagonal trend lines, but when they start lining up with previous resistances, I start to take note. So if we take a diagonal trend line here, and I'm going to mark these at the closes of these candles. So as you can see, we had a close of this red candle here. The close here, I'm going to have to align it properly. We had a close there, we had a close over there, and then if we just extend that, you can see that we have now reached another level at which we have again closed. So now we've already seen two reasons for why this might be a local top and for why we might resist. One is this diagonal trendline resistance, and one is this horizontal trendline resistance. Okay, so what else can we see from this daily time frame? Well, first of all, look at the volume profile here. So this is telling us that, but in this zone over here, I'll just draw a box here. In this zone, there was a significant back and forth. The bulls were fighting, the bears were fighting, and then what happened? Bam, we broke out of it. The bulls absolutely obliterated the bears. And now look at these bars over here on the right. There's almost no volume here. So that means that it's free reign. It's anyone's game. And if there's already a momentum to the bullish side, then it's likely that we will see more bullish action. However, it also means that there's going to be a lot of uncertainty because there's no strong selling pressure from any side up there, and there's no strong buying pressure until we get all the way down here. Okay, so let's just take this box out now and let's look at the RSI. So have a look at this. We had topped out at the 84 before, and now we have just smashed through it all the way up to the 95. So similarly to how I was saying with Cardano, that, you know, when we reach these type of RSIs, it's a suggestion that the market is over exhausted and that we are likely to see some sort of correction. So based on all the factors which I've looked at so far, I'm already going to draw my resistance box over here. Again, I'm going to mark it in red since that's my resistance color. And again, this box represents, first of all, the fact that we have already topped out with this candle with a 10% resistance from that level. Secondly, this level represents a 2-to-1 extension of the previous wave, which is the exact same extension that we saw from the second wave compared to the first wave. And thirdly, we have this diagonal resistance, which is showing potential resistance at this point. And then fourthly, I'm going to call this the local top because the RSI is absolutely mental. And again, I'm not saying that we're going to, you know, have a massive correction here or anything, but I would definitely not want to be a buyer in this market. I would assume that there's a very high probability we will correct at least 5%. and a reasonable probability that we will correct 13, and not completely unlikely that we will correct something like 20%. And if you compare those numbers to these numbers, so in other words, we may come up here and test this high again, but that would only be a 12% move up. And I would say it's very unlikely that within this candle or the next candle or any time within the next couple of days that we see a significant move up. We might just flirt with this level, this 0.022, and have another wick just pushing us up to like the 233 level. But I think it's much more likely than not that we will see a correction of about 15% than it is that we will see a move up of more than 15%. So the next thing I want to do is show you guys where would be a good time to get back into VET if you're looking for an entry point. So for that, I'm going to take the Fibonacci tool first of all and go from this previous low over here. I'm going to take it from here where the volume started. And I'm going to draw a box here, a blue box between the 0.5 and the 0.6 level. Actually, I'm going to bring it down to the 786 over here as a general support zone. And then furthermore, I'd like to point out that we found support on the daily. I'm going to move this out the way to show it more clearly to you guys. Look at this. When we started this bull trend, we were hugging this orange line. This orange line is the 21 EMA over here. We were hugging this orange line, then we exploded from it. We came back down, we found we supported it, and then we came back up again. So if I was thinking about buying into this market, I would want to wait for the daily candle to reach this orange line again. And for example, it's quite possible that in the next week, in the next 7 days, the price corrects down to that level, and of course this will continue going up. So if I were looking to buy again, I would be waiting to find support at this orange line, which again, as mentioned, is the 21 exponential moving average. So in terms of a prediction, there are a few ways that this could go. First of all, I think it's possible, I think it's more likely than not that we will have some sort of correction again down to this level. And then, we might make another test and then sort of come down like this and see a larger correction. That's one possibility. I think what's somewhat more likely is that we will actually correct already from here and come somewhere towards this blue box. The bullish scenario is that we come to here and we go for the next move up. The less bullish scenario, but which is still pretty bullish, is that we come down lower to this box and then we see another move up from there. So that's it for today's video, guys. Let me know what you thought down in the comments below. Let me know how your TA learning journey is going. I really enjoyed learning about technical analysis. It's a very different type of analysis from fundamental analysis, although I like that a lot as well. But in any case, if you like this video, don't forget to smash that like and subscribe button, and I'll see you in the next one.